Let's get back to the market now. While all eyes were on the local market yesterday after it breached that kind of all-important 6,000 mark for the first time since February 2008, the rally did extend far beyond Australia's borders. Japan's Nikkei stock average closing at its highest close for more than 25 years in the last day or so. For more analysis on this, Jack Lowenstein, the Co-Chief Investment Officer at Morphic Asset Management, joins me live in our studio. Jack, thanks very much for being patient, sitting there while the PM talked. Now, can we just talk Japan's the Nikkei Index? It jumped to an almost 26-year high in the last day or so. Now, is this all on the back of expectations that there will be very strong earnings from Japanese companies?
It is. I mean, it's amazing. The Japanese stock market is still valued about 15 times P, which is where it was about 5 years ago. But earnings have grown 60% in that time, and look like growing at a pretty steady clip for the next few years as well.
Yeah, so this time, as opposed to when it was last up in these areas, I mean, as you say, the PE ratios are much lower now. They're not in that, they're much more soundly based, the profits, aren't they? They're not the froth and bubble like they might have been in 1992.
Well, imagine if you were a Japanese investor and you've been investing for 20 years up to 1989. Christmas of 1989, market reached an all-time high, had gone up in US dollar terms, it had gone up 40-fold in 20 years. You thought you were a hero. But
yeah.
The truth is, the share price were really expensive then. There were, many shares were on triple digits. It was looking like you owned Facebook and Amazon,
Yeah, all right. So how does that compare to our market, say, over that? Well, let's take it perhaps over 5 or 10 years.
Well, over the last 10 years...
Judgment was higher because it said that you needed to satisfy all reasonable steps under
Jack,
foreign law. Now, clearly
on.
That's not...
I'm still here.
We seem to have... Yes, you are still here. We might be joined by Sam Maiden a little bit later, but she made a surprise appearance. Sorry, Jack, how does that compare to 10 years ago?
Look, 10 years ago, basically in the last 10 years, Australian stock markets in US dollar terms has gone down 20%, and
wow.
Japanese markets have gone up 20%. That's in US dollar terms.
Right.
So it gives you an idea of how sluggish Australia's been really in a global context.
Yeah. No. So how much we know you've been investing in Japan because we've talked about it a number of times on this program. How much of your portfolio is invested in Japan?
We've got about 15% of the portfolio. To put that in context, the
1/5, yeah.
Yeah, 1/5. Japan's share of global markets is about 7 or 8%. So we are quite heavily invested. I often ask myself whether it's enough.
Yeah.
But we are heavily invested and more likely to go up than down.
All right, Jack, I just want to ask you because, I mean, there's obviously a lot to like about Japan. You've talked about it in sort of praiseworthy terms, but there is still a long way to go in various areas of governance and all sorts of issues around corporates, isn't there? Yeah,
that's what I love. It could get so much better because it's so bad. I mean, Japanese companies are still hoarding cash like crazy, so they still only pay out about 30% of their profits in dividends. That's got to change, I think. They still don't have very good governance. So every time we go and visit a Japanese company, because we're an ESG fund,
yeah.
we ask them in very broad, direct terms, why have you got no woman on your board?
Right.
Why
Jack,
have you got no independence?
Yeah, Jack, I'm so sorry. We're going to have to say thank you so much to Jack Lowenstein.
Always a pleasure.
From
Don't worry about it.
Morphic Asset Management.